Hey, it's Mark Ferguson with Invest for More, and we are doing my very first whiteboard video today. So that's kind of the in thing right now. Maybe you guys will enjoy it, maybe not. We'll see. I'm going to talk about interest rates and loans today. A lot of people think that interest rates are front loaded when you get a mortgage, and that's really not the case. You're simply paying interest on the money you have borrowed. So we're going to talk about that and kind of the difference between 30 and 15-year loans and how much interest you're paying as well. So please forgive me for my handwriting. It is horrible. I would have been an amazing doctor, but we'll try and get through this. I might be concentrating a lot. All right, so we're gonna make this very simple math. I already put some numbers down, so I won't forget them. We're gonna say a $100,000 loan amount. So I'm getting a loan for $100,000. And a lot of people think, oh, it's a mortgage, you're paying all this interest up front and you don't pay much at the end, and that's true. That's how it works. But you're not paying a disproportionate amount of interest. You're simply paying the interest on the money you have borrowed. So if your interest rate is 5%, see, I told you that is just like the worst 5 you could ever write. Grit my teeth close. There we go, 5%. That means your payment will be $536, but that's principal and interest. So when you borrow money and you get a mortgage, part of your payment goes to interest and part of it goes to paying down the loan. That's how you pay it off in 30 years. So the actual interest portion of this is about $416 your first month. And that will change every month after that, because if we go over here and do some simple subtraction, we have $123, I think I did that right, little dollar sign right there, goes to paying off this loan. So this is your first month, you owe $100,000. Your second month, you're really making progress, you owe $99,877. So now, in your second month, your interest is based on that amount, not the $100,000. So your interest would go down slightly and your principal would go up slightly. And every month after that, the same thing happens. Interest payments, the interest portion goes down, the principal portion goes up. So this is not some crazy front-loaded loan. You simply pay the interest rate based on what you have borrowed. Now you'll notice over here, I have 15-year down here. This is the payment on a 15-year loan, $100,000, 5% interest. Now, to be safe, to be honest, a 15-year loan usually has a lower interest rate than a 30-year loan, but just to make it easy, we left it the same. So you can see you're paying $244 more every month for the 15-year loan. I didn't do this math, but over 15 years, that's 244 times 12 times 15. It's tens of thousands of dollars more you're paying on the 15-year loan. And that is why you pay less interest on a 15-year loan, because every month this amount you owe is going down more and the interest portion is going down more as well. So what's the difference between 416 and 790 is something like 374, right? You can double check my math. I didn't do any of this to start with. So you can see in month number 2 with the 15-year loan, it's not this, it's 630, no, 26. There we go. All right, so you're paying down, $250 some more every month in the beginning, and that'll change over time as well. And that's why the 15-year has so much less interest. Now, for me, I want the 30-year loan. I want the 30-year loan because that, whatever it is, $50,000, that's a complete rough guess, is not that amount, that I'm paying extra into the 15-year loan. I could take that money, buy more rental properties, buy more real estate, and make a much greater return than whatever my interest rate is. And this is a high rate. Rates right now are in the 4s, or sometimes less, depending on what kind of loan you're getting. So I would much rather have a longer term loan, keep paying interest on that loan, and take that money I'm saving and buy more real estate, more properties with that money. And by doing that, not only am I getting cash flow, because my rental properties make money every month, but I have more tax advantages, more forced appreciation because I'm getting good deals. I'm paying down more money on the mortgage every month because I have more houses. If they go up in value, I have more advantages there too because I have more properties. So basically, I can buy way more properties with a 30-year than I can a 15-year because I'm saving so much money each month. So that's one of the myths that I really don't like that the banks will put out there. It's not, a lot of investors doing it. It's the banks who tell you the 15-year is better. But the banks are lending you money, so why are they saying it's better if it's really not? Well, one, they make more money when you get more loans, and two, they don't want their money lended out there for that long. They like a shorter term. So you make more money, you have more properties, and I'm okay paying 5% or less rate on my money. And in fact, if I could do a 40-year or a 50-year mortgage, I'd do it all day long. Because not only are you saving money every month, but in the future, in 15 years, 20 years, 30 years, this money is going to be worth much less than it is now due to inflation. In fact, at 30 years, it's going to be worth less than half of what it's worth now. So the more I can put off paying that money until later on, the better off I'll be, the more money I will make. All right, so there's a real quick, simple video on interest, some things on loans. I have a much more in-depth video on the 15 versus 30-year loan, but it gives you an idea of how interest works, how a mortgage works. You're not front-end loaded. You simply pay interest on the money you borrow. That's it. All right, thanks for watching. Hope you guys enjoyed it. Let me know if you like this or some of my other formats better where I have a computer screen. You don't get to see me with my amazing handwriting. Check out investormore.com as well for many more articles on loans, finding deals, all that good stuff. You can see all my flips and rentals on there as well. And we appreciate the likes and comments too. Thanks a lot. Hope everybody has an awesome weekend.